But do you think, despite all of this, it has a stomach for a fight like this? I mean, we're talking about 125% tariffs here now.
Well, it's not going to be a walk in the park, but actually, strategically, China is in a better position here.
Has the president blinked, or is this all a part of the art of the deal?
Well, I thought that people were jumping a little bit out of line. They were getting yippy, you know? They were getting a little bit yippy, a little bit afraid, unlike these champions, because we have a big job to do. No other president would have done what I did. No other president. I know the presidents, they wouldn't have done it. And it had to be done. What was happening to us on trade, not only with, you know, if you look at it, not only with China, but China was by far the biggest abuser in history, and others also, but somebody had to do it. They had to stop because it was not sustainable.
Last night, Donald Trump announced a 90-day reprieve for the so-called reciprocal tariffs on most of the world, except for China, for which he has ramped up tariffs to 125% in retaliation for their retaliatory tariffs. So what is going on? My name is Cindy Yu, I'm assistant editor at The Spectator, and joining me to decipher everything that is going on is the economist Diana Choyleva. She is the founder of Enodo Economics, which forecasts and analyses macroeconomic trends in China and beyond. Diana, welcome to Spectator TV.
Thank you so much. Lovely to be here.
Diana, first of all, just help us make sense of everything that's happened recently. What the hell is going on? Did you see Trump's 90-day reprieve coming?
Look, what is happening, cutting through all the noise and high frequency movements and volatility, the world is really going crazy. But essentially what's happening is the bifurcation of the world into a US-led and China-led sphere of influence. This has been going on for some time, but now it's accelerating at an extremely fast pace. And each country will need to choose whether they are with the US or with China.
Mm-hmm. But when it seemed like Trump was levying a tariff, a reciprocal tariff, as he called it, on basically all of the world, it made it a bit easier for those countries to say, well, maybe we should be starting to side with China a bit more. But now that has been pushed back for 90 days. That changes the landscape, doesn't it? Does Trump really mean what he's talking about?
So there are two objectives for Trump, and in a way they are kind of conflicting in the way he goes about them. There is a genuine desire to reindustrialize the US, to actually in some ways shrink its sphere of influence and focus on not being the global policeman that we have all become used to over the last 80 years, but really within China's US's more direct geographical location, as well as the Indo-Pacific, and to some extent kind of leave Russia and its kind of immediate sphere of influence without necessarily a very heavy US involvement. So there is a kind of an overall geopolitical element to this. And then reindustrializing the US in terms of bringing manufacturing back. Now, that the Trump administration had a long-term plan, had something that looked a bit more thought out. But that went in conflict with Trump's erratic behavior of trying to use basically the tariffs as a negotiating tool for short-term issues that the US is trying to, with each country, different issues, negotiate. And that created this extremely volatile and uncertain environment for business, so which is actually going against their long-term strategy of reindustrializing America and trying to bring as many of those countries that they want to have in their sphere of influence to their sphere of influence. Now, China is not playing ball. They essentially have sort of responded with, okay, bring it on. And they've had 10 years to prepare. They are concluding that with this type of administration, and just generally, to be honest, irrespective of the administration, it's nigh impossible to reach any grand bargain. That ideologically between the two is impossible, to be honest. So they are not, they've changed completely the way they're dealing with the US. In the first Trump administration, it was a lot about essentially trying to appease America, trying to see if, they can still deal with them. Now they've given up on that and they're focused entirely on bringing Asia, and they see a big opportunity now in Europe to its sphere of influence. So Trump rode back because all of a sudden, really, he is focusing strategically on China as the main issue, even though realistically he has a gripe with everyone in terms of various barriers. It's not really reciprocal tariffs. I'm not going to repeat all this assessment that everyone's talked about. But the bit which is quite also China related is, of course, all these other countries that China has used in the last 10 years to route its exports to the US through. So then they, of course, America definitely wants to close that. So when they're talking about negotiating with, let's say, for example, the UK versus negotiating with a place like Vietnam, the choices that Vietnam will have to make are very, very stark. Whereas in the UK, of course, that hasn't really been used as as a route for Chinese exports into the US.
So some of this global tariffs is to close off those loopholes that China has used since. But as you say, in the last 10 years, since the first trade war, China has diversified away from the US. I think imports from the US are down as a proportion of its imports. Exports are down as a proportion of its exports. We hear about this dual circulation, that the Chinese economy is becoming more self-reliant. But do you think, despite all of this, it has a stomach for a fight like this? I mean, we're talking about 125% tariffs here now.
Well, it's not going to be a walk in the park, but actually, strategically, China is in a better position here. The first thing is the political cycle, and of course, the nature of government. Xi Jinping, in charge of the Chinese Communist Party, can withstand a much longer period of economic pain without having to change course, in particular because he now easily can blame the US for where we are. And already having taken this very strong stance of we'll fight until the end, it's extremely impossible to kind of reverse in any significant way. Whereas in the US, they will have, or Trump will have to face off with first the consumers and the electorate that he promised lower inflation. That's not coming. Even the composition of what sort of China imports and exports to the US suggests that it's the US consumer that will carry a lot of the inflationary burden. And it's not just a one-off price adjustment with adding the tariffs, because supply chains will be rerouting, breaking up, etc. This is a multi-year period of cost push inflation. And even from a policy perspective, China can have a coordinated monetary and fiscal policy response, whereas the US, however much I'm sure Trump will try, does not necessarily hold the cards when it comes to monetary policy and the Fed. So the ability of the US policymakers to respond to this emergency situation, outside of the issue of how sort of disorganized and last minute the administration seems to be in what's going on right now, they are in a much weaker position. So strategically, and actually there is another point as well, America will have to deal with a stagflationary environment, which is harder to resolve than what China is having to deal with, which is a deflationary environment, where it's a lot easier to pump with liquidity. And simultaneously as well, the Chinese do have still a lot of fiscal scope to mop up and cover what is actually a very significant bad debt problem in China and an issue over investment, etc., etc. So this is definitely not a walk in the park, but Beijing has concluded, evidently, that there is no other way but to stand up to America. They have prepared And they are banking on the fact that ultimately the economy, the markets, and eventually the electorate in the US, including, a lot of the wealthier Republican donors that have supported Trump's agenda, will put pressure on Donald Trump himself. In fact, Donald Trump said also that he's prepared to talk on company by company basis, which also allows for sort of a roll back and step down without necessarily losing face.
And presumably, what's happened in the last 24 hours, China will also see as the fact that Trump has been made to step back a little bit by the markets.
Well, it's interesting. I think on both sides don't know each other as well. They have less and less communication. There is a huge gap and a problem there. And I do think one of the major issues is the fact that they don't really understand each other. They cannot judge necessarily what is a real signal, which creates a very volatile environment. And I came back a week ago from the Boao Forum in Beijing, and it was the Boao Forum for Asia. And it was really striking. There was a panel on globalization with representatives from most of Asia, also America as well. And really the conversation kept moving to the regionalization concept and further discussions of how they'll integrate further. And the US representative sort of kept saying, but the US, and he was quite critical of Trump, but he was getting zero basically attention, and not sort of in a staged way, but really, we're really not interested. So, well, you can't forget the biggest economy in the world. It's like, well, they were so this really, there is a real shift in China as to what they can reasonably expect from any dealings with the US. And to be fair to Trump, actually, China started this decoupling before even Trump turned up the tariff war, because China started with Made in China 2025 and pursuing this agenda of writing up the value-added chain and making its economy self-sufficient. So this has been really going on ever since Xi Jinping came to power, and then accelerated during the first Trump presidency. And now it's reaching its crescendo moment.
Yeah, and that's really interesting because the regionalization point is definitely what I'm picking up from Chinese media as well. I think that People's Daily ran an editorial a few days ago where, one of the reasons it said that China can afford to have this fight was because look at the percentage of our trade with ASEAN countries, look at the percentage of our trade with Belt and Road countries. We simply don't need American trade anymore. And whether that's true or not, that it was definitely one of the top reasons that they gave. But Diana, what you're saying that China can stomach this fight, it can be controversial to some amongst economists. I think there's a really fierce debate going on here. Often people say China is the major exporting power. It just has less room to tariff American imports because it just imports less from America in any kind of tariff tit-for-tat game. So why do you think those economists get that wrong then, if you think that China actually has more capability to weather this fight than they think?
So, I've been analyzing China, as you know, for more than 25 years. And in my time, I've never been afraid to raise my head above the parapet when I have a strong conviction. And more often than not, I get things right. Whether that will be the case this time or not, we'll have to see. But I think what's happening is that there has been a very fundamental shift in policy when it comes to the economy, which started in September last year. And it's crucial to all this, because what China needs is less so export markets, but to really finally get its domestic demand, in particular consumption, going. And for a long time, they really ignored that side of the economy. In fact, financially repressed households, etc., etc. And a lot of the economists in the West in particular, and, as you know, I'm also a senior fellow at the Age Society in Washington. I'm quite well acquainted with the Western view of China. And, really, to my mind, they sort of missed what an important turning point this focus on consumption has been since September. China always before looked at it from the supply side, and this time they really are looking at it properly from getting the demand and the consumer side going. And of course, that is also a Herculean task, and they're not necessarily doing all the right things, but they're doing a lot of positive changes that also may take time to come through, but to create a vibrant consumption that goes up as a share of GDP and then serves as the consumer of a final resort for China's sphere of influence. And in fact, China is quite interested in outsourcing, especially the low value added manufacturing to other countries, and then, of course, importing back the goods, the consumer goods that they will need as well. So I think it's this that differs, that my assessment is that they're serious about consumption and they're throwing everything at it now.
And could you just elaborate on how that relates to the tariffs then?
So it relates to the tariffs in that if they manage to get the 1.4 billion Chinese to consume, and if you look at the consumption rate as a share of GDP relative to some place like America or the UK, it's half that. So there's a huge structural scope for growth if they manage to get the consumer going. And then that will be very attractive as well for their trading partners, because one of the key issues with China is the worry that, okay, well, we join your sphere of influence and all you're going to do is dump your exports onto us. Really, the rest of the world needs a consumer base, not, we can't all export our way to growth.
That's really fascinating. So as the US tries to become less of a world consumer, China is trying to become more of one.
I'm not sure the US is necessarily trying to become less of a consumer, but China has a huge scope to do so, whereas the US is already consuming quite a large share of GDP.
And how successful can the party be at doing that? Because famously, Chinese consumers and Chinese households in general save a high proportion of their income. They don't tend to consume, they don't tend to borrow to consume. And that has been a cultural as well as a structural issue. Not least to mention as well the relative lack of confidence since coming out of COVID. You know, how successful can that shift be?
You're absolutely right that it's structural and cyclical reasons, and the structural reasons have been there for a long time. Over the past 15 years, one structural reason kind of fell away, and that was due to the worsening demographics, because all of a sudden China's vast pool of labor wasn't as vast and not as cheap, and the labor force started shrinking. So the share of wages in GDP in China is the same as in America. They actually did catch up on that front, but the huge difference in income for total household income as a share of GDP in China is in income from assets versus the US. So the government has been pushing in that direction. How do they change the financial repression of households? The majority of wealth has been in the housing market, and the houses are for living in, not for speculation. Let's have no house price inflation has really severely damaged confidence, partly together with the COVID shock, where people under 40 for the first time experienced what going backwards in authoritarianism can mean. That has really dampened confidence. But now in September, houses are for living in, not for speculation went out of the window. And this is really, China is really actually trying to revive the housing market. Again, various issues there. Also, they are trying to turn their equity market, which has never had any correlation really with growth and has been a speculative casino-like place where people don't put money for the long term, into a professionalized capital markets where Chinese can invest their money and stay for the long term, as well as get higher dividends. A lot of household financial wealth sits in interest-bearing deposits that have been going down, and why we have been also saying that it's unlikely that they will kind of really push interest rates down drastically, not least because the banking sector is under tremendous pressure, but also because that negatively hurts households and their the gearing is quite large. It's about 1.5 times interest income. So Chinese households are very large net savers. So these are the structural shifts. There is a lot to do with lowering cost in terms of education, et cetera, et cetera. The cultural aspects will be the most difficult to shift. And you can probably talk more about, from a genuine cultural perspective about that than me. But I think one of the biggest issues is the fact that really China has always, in the last 100 years, had so much drastic change that this is really innate. You notice it in the Chinese diaspora in other countries with, where all the other reasons why the Chinese saves are not there. They still save these diasporas more than the local population because of this innate expectation that things can just change dramatically. And COVID was the first time that such a change appeared in the minds of all these people before 40. And so that will be the most difficult to shift. But the other structural reasons in terms of more income flowing to households are not, they're down to policy.
Yeah, and so they can be manipulated. So, Diana, taking a step back then, how optimistic are you for the Chinese economy in this year and next year?
It's going to be a huge hit, however we cut the cake. But I am not as pessimistic as it seems to be US policymakers are in their expectation of what China can achieve or what they can reasonably manage to withstand over the course of this year.
And very finally, Diana, I'm sorry to ask you this because it's such a fast moving situation, but do you have any sense of where this goes next? How bad can it get? How long will it last? Or are we just utterly in uncharted territory right now?
We are definitely in uncharted territory, but what I can tell you is that this is going to get worse and it's not going to go away. There is no way this is going away. This is now, we are in the eye of the storm of how I started our conversation today, the bifurcation, the great decoupling. As you know, we were the first to kind of alert and analyze since 2017 and call it the great decoupling theme. And it includes the trade war, anything to do with the economy. There's capital markets, which is a different story, the tech war, which is ongoing, and of course, Taiwan war and where we get to on that front. So really, we've just pressed on the accelerator of this bifurcation, this decoupling, this fundamental reworking of the global order. And it will certainly provide us with many opportunities to talk about how things are going.
Well, I mean, for viewers, then I guess strap in. Diana Choyleva, thank you so much for joining Spectator TV.
My pleasure. Thank you so much for having me.